Hi everyone, this is Rob Roy and welcome to the Elliott Wave Options S&P 500 US market update. Well, the importance of today's trade was it was the first trading day without the end of quarter mandatory portfolio rebalancing. So we want to see how that was going to affect the markets. So let's take a look. And if you're new around here, don't forget to subscribe and give us a like. You'll get the latest US market updates as soon as we post them. As a quick reminder, we're in an extended C wave to the downside in this zigzag pattern, coming down and hitting the 161.8% level. And remember that Elliott wave rules state that if you're going to go down to the next extended level, you should retrace or correct back to the prior major fib level first. And that's what the 100% level is. And you can see 1, 2, 3, 4 days that we've bounced right up against that level, clearly acting as resistance. And then today, the move to the downside, and the importance, as I said in the intro, of having the first trading day without the forced buying from the rebalancing. However, with that said, today doesn't mean that much. If you're starting a new impulse leg, breaking a major moving average, whatever, you need a second day, a follow-through, or confirmation day. So whether or not we close below this low will matter in Thursday's trade. So we'll see how that plays out. But also wanted to go back and mention and follow up with a couple of things that we talked about in last night's Trade Finder webinar. And if you'd like to join us in the next Trade Finder live webinar, all you have to do is go to our website, ewotrader.com. Right there on the front page, you can register. It's free, and join us for our free weekly webinars. One of the questions that was asked last night was dealing with oil. So we can take a look at the chart of oil, and you can see we're in a three-wave to the downside right down here around the $20 a barrel price, bouncing just a tiny bit, but not much, forming a bit of a triangle. A way you can trade that, if you're interested, is trading the ETF USO, and you can see the chart patterns are almost identical, and we have this support building right in this area with a clear set of lower highs. So we have a nice descending triangle. Now, a lot of people think that a descending triangle automatically means the breakout's going to be to the downside. However, statistics, research doesn't bear that out. Research shows that this is liable to break to the upside just as easily as the downside. And that goes with symmetrical, ascending or descending triangles. They just going to break out. So we're going to get a pretty good move. And if we go back and look again at the price of oil, this should be about a $15, $20 move in the price of a barrel of oil. So it should be a pretty decent move when it breaks out. And it does look like it's getting pretty close towards the point of that triangle. We could see a breakout here in the not too distant future. Another one I wanted to look at was TDOC. This was a case study consideration that we'd given the previous week with this wave 3 move to the upside. And then we had a downgrade yesterday, and I mentioned during the Trade Finder webinar that it's always suspect when an investment firm downgrades a stock that they don't have a position in. Are they looking to create one? I mean, are there ulterior motives here? I always have that kind of feeling when I see the upgrades and downgrades along those lines. And look what happened. Turned around right back up today, almost back up exactly what it was yesterday. So if they pushed it down and then acquired the shares and bounced back up, well, that's how it goes sometimes. But the pattern looks really good. So I just thought I'd share that with you as well. And then last but not least, let's take a quick look at the dollar, because I did want to follow up that the dollar is holding down here. We talked about this impulse move being a potential A wave, and then we had the B correct right to that 61.8% fib level, which is holding, which means that we could very well move up and make a C wave high on the dollar. What would negate that is if we break down to the next fib level, which is the 78.6% level. If we come down there, then that would disqualify this potential pattern. But for now, it's qualified, and that's the one that's in play. So that catches you up to date. Hope you've had a wonderful couple days. Be back to talk to you again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.